Wow, what a crazy day. Market is definitely going crazy. One of the best days. Happy CPI day, tons of information. So I thought this is a perfect day to unpack what's going on and share you the trade that I'm setting up that I think is a very low risk, high reward going into next week. At the end of this video, I also want to share a really special news, a really special email that I received that I want to share with all of you. So definitely stick around. It's probably going to be around 10-minute video, but definitely stick around for that end. I think it's going to be a great surprise for all of you. So let's unpack. As you can see behind me in our trading terminal, absolutely a stunning day. Almost everything is green. So SPY has one of the best days in a really long time, up 4.5%. Nasdaq up almost 6%. Dow is only 6% below its all-time high. So a lot of stuff's happening for Dow Jones. IWM up 5%. Bitcoin got a little bit of relief rally. It's still below the 18,000 mark, but it seems like market as a whole is bouncing. So the question on your mind, rightfully so, is what's happening? Well, let's go to our calendar in trading terminal and actually unpack what was the news and what was the catalyst. If you go to our economic calendar over here, you can kind of see that today was a really important day. It was the CPI day. And CPI has been one of the driving factors in the market. Everyone's looking at it, not only because of the inflation, but also because of what the Fed is about to do. And tons of information came out, lots to unpack here, and I took a really important trade going into next week that I want to share that with you as well. I have my TWS station open so we can unpack that. So CPI came, inflation is cooling down. So some of the key factor was food only rose 0.6%, which is the smallest gain this year. Apparel actually fell down. We talked about Nike's earning, a lot of the Lululemon's earning. A lot of these companies have a lot of inventory buildup. Same with Walmart, and they have to mark it down. And as they start marking these items down, you'll see these items show itself up in the CPI over the next few months. Furniture, same issue, fell down by 2%. Health insurance decreased at a record 4%. Medical care services also fell down. Used car have been on its way down. Same with airlines. One of the key factors that actually put the inflation up was energy, which was up slightly, as well as shelter. And we know shelter will slowly come down as the OER, which is the owner's equivalent rent, start adjusting for that falling house prices. So obviously market loved this news, and you can kind of see that in a reaction. So let me actually go to our charting on trading terminal. You can kind of see in the chart of Apple, once the news came out, I mean, look at this huge rally, and then pretty much a squeeze all the way around afterwards. The positioning was extremely bearish going into this CPI number, so it was kind of expected that we are going to see some kind of a rally like this. Same story again in the SPY. Massive rally there. When you actually unpack the CPI numbers and you take a look at it, it's really telling a really interesting story. And you can kind of see that, we were initially in the beginning of the year, we were mostly goods. And then as the reopening started, we switched from goods inflation to services. Now the services, this black part, is increasing while the good is coming down. So hopefully within the next few months, the services should adjust as well. And, service inflation should actually come down as well. And again, you can kind of see it in this image very clearly. You can see June, July this year was the time that inflation has peaked, and it's slowly coming down. So again, kind of a good news for the market. But the key story here is on the terminal rates and what the Fed is about to do. So prior to the CPI prints, it was a 50% chance between a 75 basis increase or a 50 basis point increase. And now we can see that it's actually 80%, only 0.5% hike. So pretty much a lock that Fed's gonna slow down. Another key news here is terminal rates. So if you actually go and look at March, which is the end of this rate cycle, you can kind of see the distribution now is weighing on right around 5% for terminal rate. Initially some banks were saying we could even go to as high as 6% interest rate, but now we're clearly leaning towards 5%. Again, as of the data we have right now, that's where it's at. And I don't want to pat myself on the back, but I kind of saw it coming. So I have a tweet of myself up from earlier, October 21st. So a month, almost 3 weeks ago, and I said shorts are about to get squeezed and we are going to 4,000 on SPX. And I still believe that, and I set up a trade based on that belief, which I'll share with you momentarily. But yeah, time for some pat on the back. Let's see if this rally has more room. So trade ideas. Of course, we're traders here in this community, and we only care about making money and using this information that I just gave you and kind of formulate a trade and a trade idea. So the trade that I've set up is actually an unbalanced butterfly on SPY, based on a thesis that this rally will continue. We'll see some short covering and short squeezes, and we'll probably go on a SPY somewhere around 410. And I set up this butterfly, and I set it up in a way that it's for a credit. So it's kind of a zero cost butterfly. I'm risking about 6,000. In a worst case scenario, I'll lose about 5,900. So risk to return is at about 1%. This is TWS, by the way, interactive broker platform, and I'll show you exactly how you can set up a trade like this. And you set it up for a credit, a small credit or no cost. If you are right and a SPY actually moves toward that 400 mark, that 410 mark, you'll get the maximum amount of money. And if you're wrong and the rally continues, you start losing some money. And you set these trades up. Your delta is pretty much neutral. You don't have a lot of delta risk. If we're down or we stay around, if we continue moving up, then you start having some delta risk that you probably need to hedge. But again, expiry on this are for next week. So let's see what happens. So let me actually go to my interactive broker TWS station and actually showcase you how to set up a trade like this. So just to show you guys how to set this up. For example, this trade was for November 18. So you open up your option chain and turn on the strategy builder over here. Pretty easy. And then in order to set this up, for example, you think SPY is gonna go to 406. You sell some 406. A few strikes down, you go ahead and buy right at maybe 401. You go ahead and buy some options, and you hedge your upside a little bit by buying some. We want to make it even, so by buying some 411, and then very easily you just change the numbers here. So let's make this 3, and then on this end, let's make this 2. And you can kind of see that the platform kind of recognizes that, okay, you're doing an unbalanced butterfly. And one of the things that I really like, again, you can set this strategy up for almost no cost. So this is going to be for credit. And if the market goes down, which is, of course, we're in a bearish scenario, there could be more pressure on earnings, more bad news. You want to be hedged, so you don't want to lose a lot of money. So you're setting this up for credit. If the market continues its short covering rally, we go up. If you're right and we go to somewhere around 407, 408, you make the maximum amount of money. And then if the rally continues, you start losing money, and then your losses are capped at 411. So this is kind of, you set these up. Again, this bear market has offered a lot of opportunities like this, and you can really click on the profile option here. So let me actually click on this and bring this a little, make this a little bigger. Yeah, so you can really see actually how you're setting up your strategies as the time goes by. Kind of look at the risk to reward, look at the profit probability, and kind of see, okay, what's happening, when do you make the most amount of money, and then when do you actually need to start thinking about hedging your delta a little bit, your negative delta a little bit, because as the stock goes up, you start losing money, right? So you're pretty much neutral, and at some point your delta turns negative. So you got to buy some positive delta, meaning buy some of the underlying to hedge this butterfly strategies. Anyway, that's the trade that I have going on into the next week. I think this rally has some room. Probably next few days we might not do much, consolidate a little bit, but I think the 4,000, the tweet that I sent out earlier, I think it has some room. Again, the platform that I'm using is TWS by Interactive Broker. A lot of people have asked me about this, so there it is. And you know, one of the best platforms out there for option trading. So what do you think? You think the market is going to continue going up? You think this is just a fluke in a bear bounce? For the record, I think we're still in a bear market. I think we're probably going to go test the June lows one more time, kind of create that triple bottom pattern. There's still tons of earnings for next quarter and lots of bad news that hasn't been priced in because a lot of management haven't really give out guidance. So I'm very cautious with my portfolio, but let's see what happens into the next week. Oh, and by the way, lastly, before I end this video, if you've stick around till the end of this video, I want to share something really amazing with you. A member actually sent me an email today, and he said he made $16,000 on his Amazon trade. So of course, when you get emails like this from members, it's definitely amazing. This is one of the members I actually met in our Florida meetup last week. Totally made my day, and I thought I would share this with you all. Hopefully all of you have green days like this. If not, try to minimize your risk, take some rest. Happy Remembrance Day, and we'll see you next week. Thanks for sticking around. Thank you.